Hi, everybody. This is Shafi from Coverager. Thank you for joining our webinar on insurance and community. So the idea of today's session is to talk about how we can offer stability and foster a sense of community and a sense of belonging. So I know you probably all know this, but you can hear me. We can't hear you. I do encourage you, though, to submit questions using your control panel. And obviously, this session is recorded, and you will be able to have access to the presentation and the recording later on. So can somebody indicate that they can hear me? Because we did get a comment that one of you cannot hear us. Okay, so it comes and goes. Some can, and Brett, I hope that eventually you will be able to hear us. All right, so let me tell you who's on the line with us. We have Emily Smith from Cake and Arrow. She's the head of content marketing. She's joined by her colleague, Lisa McGee, which is the lead experience designer. And we also have Dr. Alan Cambervell, which is the founder of USAR and the CEO. He's joining us from Los Angeles, as well as Pierre Thalasis, which is the CEO and co-founder of Relove, joining us from Paris. So pretty much a diverse group. And we're going to get started with Emily.
Thank you for the introduction, Shafi, and good afternoon, and welcome to the webinar, everyone. As Shafi mentioned, my name is Emily Smith. I'm the Director of Content Marketing at Cake and Arrow. And if you are not familiar with Cake and Arrow, we're a customer experience design and an innovation company that works across a variety of industries, including insurance. We do commercial strategy, digital product and service design, and new product innovation. All of our work is heavily grounded in research, some of which we will be sharing with you today. So over the past 9 months, we have spent hundreds of hours studying millennials, doing all kinds of different research. Some of you may be familiar with some of that research. And when I tell people we've been studying millennials, I often hear, why millennials? Why now? Why not Gen Z? It seems too late to really be focusing on millennials. And the reason for this is that generally speaking, we don't feel like the insurance industry is really resonating with millennials. According to Bain and Research, they found that 80% of millennials say that they would move their insurance business to new entrants that are capable of creating and delivering more value than incumbent insurers. So what this tells us is we're right, the insurance industry isn't really resonating with millennials in the way that it could. But it also begs the question of what really is value? So what are we talking about when we talk about delivering value to these people? Conveniently, Bain and Company has also done research into values. They have identified 30 elements of value that fall into these 4 categories you see here: functional, emotional, life-changing, and social impact. And it's our understanding that most insurance companies are really operating at this functional level. They're simplifying experiences, helping consumers save time, helping them reduce effort, reducing risk. And some of the better ones are operating up here on the emotional level, perhaps experimenting with rewards and incentives, wellness, putting effort into their aesthetics and design. But very few companies are operating at this highest level and delivering on these really high level values. And it's our belief that in order to really differentiate in this very competitive market where you're competing for millennials' time and attention, you need to deliver at this level. So how do we do that? So we believe that it's really about resonating with millennial values. And by values, we're talking about things like equality, community, family. And we believe that if you're resonating with these millennial values, what you're going to be doing is you're really going to be delivering at that highest level of value that we were kind of looking at in that last slide. So how do we deliver value and align with millennial values? According to our primary research, when it comes to millennials, insurance is actually really well positioned to do this. We conducted a survey last spring that found that the key challenges facing millennials today have to do with financial security and stability, while further research we conducted over the fall indicated that some of the most important values to millennials are around community and authentic connection and interdependency and social good. So the good news is that at its core, insurance exists to address these key challenges. This is, insurance is bread and butter, financial security and stability and certainty in the future. And when you really think about it, and I'll explain this more in a second, insurance is well positioned to also align with these millennial values around community because insurance is a community. So what do I mean by insurance as a community? So at its basic level, insurance is really just a group of people who have similar needs and interests, aka a community, who are pooling their resources together in the hopes that if something goes wrong or they need access to some kind of service, they'll be able, they'll be able to get that money back in some capacity. So the bad news is that millennials have the perception that insurance companies, A, don't offer value, and B, don't align with their values. So really, it's a matter of not telling the right story. So how do we tell a better story? So first thing we need to think about is how do we really deliver on the value that we're promising? So I think we spend a lot of time designing fancy websites, experimenting with new technology, machine learning, AI, things like that, without thinking about whether or not our products are actually delivering value to our customers. So do our products actually work for people? And I think that, that's something we take for granted. The other thing that we think that we can really do to reach this concept of values around community is surface that community aspect that I was just talking about. So as the model exists right now, insurance is really a two-way transaction between me and my insurance carrier. I pay them money every month, and if something bad happens, they give me money in return. If nothing bad happens, it's really just a one-way transaction, and that's kind of it. But that ignores all of this other stuff that's happening beneath the surface, in which my money is going in to help create all of this security and stability for other people. And actually, even if I'm not getting any money back in return, my money probably is going to help someone else. So our theory is that if we're able to surface some of this community element of insurance that already exists underneath, that we'll be able to resonate more with millennial values. So we kind of took this theory and we designed two different insurance apps for millennials using these concepts. So the first concept is a wellness app that makes alternative health and wellness services that aren't typically covered by insurance more accessible and available and even affordable to millennials. And the second is an emergency funds app. And this app would essentially provide people with access to emergency funds in the case of unexpected expenses, things like having to travel because someone died, unexpected car repairs, unexpected home repairs, even broken laptops and computers. So we tested these concepts with millennials, and what really makes both of these concepts unique, however, is the community aspect that we built into it. So in order to access these products, you would join a community. You would share costs within that community, and it would be kind of a values-based community of people that share your risks and your lifestyle and your values. And you would pay premiums just like you do with regular insurance. This money would be pooled within the community. We, as the app or the company, would take a small percentage off of the top, and then anything that was left over that didn't go into paying the expenses or the services for the community would be redistributed to the community at the end of the year. So this is kind of the concept we're working with. So in order to join or have access to this product, what you would do is you'd fill out a short questionnaire that would help us identify some of your values, your risks, your priorities, things like that, so that we could then place you into a community group. So in the examples you see here, we've identified 3 community groups based upon your questionnaire that we think kind of fit with your values, but also with some of the services or benefits that you're looking for. So you'd be able to kind of scroll through some of these different communities, see which one makes the most sense to you at that kind of values level, but also looking at price and services, and then you could join those communities. So once you join the community, not only do you have access to the services, but you also have access to this community. And that's really the next level of value that we're trying to bring out here. So you're able to kind of see how the money and the services are being used amongst the communities. So you can see that your premiums are going to work for other people and for yourself. You have access to local community factions if you're interested in making more authentic connections. And then you really have a pretty intense level of transparency into how these funds are being used and moving around the community and what kinds of services they're going to cover and how much might be left over at the end to be redistributed. And then finally, you'd be able to suggest new coverages and also vote on coverages, giving you really a unique level of autonomy over what this product is and does for you and your community members. So I'm going to pass it off now to my colleague Lisa. She's our lead experience designer who really headed up the research here and was the one responsible for putting this in front of millennials and testing it. And she's going to share some of the insights.
Thanks so much, Emily, and hi, everyone. So over the course of a few weeks, we completed 2 rounds of qualitative research with 26 participants, with the second round building on and improving the concepts developed for the first round of research. The research consisted of hour-long one-on-one interviews where we asked participants about their lives and had them explore and give feedback on the prototypes we created. And as Emily said, when we were looking to create concepts to test with millennial consumers, we knew we needed to go beyond messaging to demonstrate value. We need to make community a core part of our concepts in order to resonate with participants. And this kind of pattern of skepticism in marketing proved out in our research. So many of our participants were skeptical of how useful or real the community aspect of our concepts would be when reading a synopsis of how the app worked when they were first introduced to the concepts. We were guilty until proven innocent, with many participants believing online communities are superficial. And it's easy to say a product is community-based or peer-to-peer, but without proving that to the user, it feels more like marketing fluff or fake news, if you will. And so we created experiences that showed the impact of participation by sharing member stories and exposing the number of members to their individual contributions that they had helped. And in this way, the community became real for our research participants. This was further proven when participants encountered the ability to meet up with local community members. So participants who were skeptical at first were now excited to find folks near them who were like-minded and shared their needs, pains, and values, creating opportunities for support networks that were both digital and physical. It also made our participants feel less isolated with regard to their personal problems, which, when you think about it, is really the whole point of joining a community. One that often gets lost in many of today's social platforms where trolling and winning likes reign supreme. However, for our participants, community didn't necessarily mean giving up rights to privacy or autonomy. When our participants were reviewing communities to join, seeing the wealth of information about members available made some a bit apprehensive. They wanted to know what exactly would be shared once they decided to join. This was especially true in our first round of research when we asked participants if they wanted to connect their Facebook to their account. We were really surprised to find that 13 out of 14 of our participants were wary of doing this. There's a lot of mistrust in data privacy and control today, especially with Facebook being in the news so much, and our participants wanted to make sure that they were going to be in the driver's seat. However, the need to control their personal data didn't necessarily mean they weren't willing to share their personal data. When participants further explored the way information was being used and shared in the app, they found it really interesting and engaging, and were willing to share as long as it was both autonomous and transparent. In fact, we saw in some cases that participants were actually willing to give up some of their autonomy. So here we have screens from both apps where members can vote on new coverages within their community. Most of our participants stated that they would actually be okay with the community voting to include coverages that they didn't personally find useful, as long as it was voted on as seen as beneficial to others in the community. We also saw in our research that the more we connected the products and services to individuals' values, the more they felt good about participating and sharing in costs. Joining groups that aligned with their needs and values was integral to the appeal of the app. Participants said it was critical to the idea of joining a community, and that in order to build that trust and meet their needs specifically, that it needed to be very personalized and really based in their real values. So when we tested this concept in our first round of research, it didn't quite pay off. The communities we created were focused more so on financial profiles, like being in debt. And while participants liked the cost sharing aspect, they didn't really feel connected to the communities and were generally less trusting of them. So when we updated our prototypes for our second round of research, we made sure that the communities reflected values and identities that the participants could connect with on a more personal level, and this resulted in a much more positive response overall. It even helped participants to envision the kinds of communities they might want to be a part of. Some of their ideas included communities for young families, sole income providers, moms with postpartum depression, or extreme athletes. When our participants saw the data for the top filed claims, it also demonstrated that they were helping people with the things that mattered to them, putting them at ease that their money was being spent in a way that aligned with their real values. Unfortunately, for many, insurance products are really only products when something bad happens. As an experience design agency, insurance carriers often ask us, how can we begin to create positive experiences with our customers? Giving customers the opportunity to give back and support others can be rewarding and valuable, especially when you're lucky enough to not have anything bad happen to you. I love this quote from one of our participants. I think he summed it up really nicely when he said, "It's the fact that you can see the number of people you've helped. That helps with the difference between the money you've put in and what you needed covered throughout the year. Just knowing that you've been helping that number of members makes it more worth the money." And our research showed, which should be no surprise to anyone, that this helping others made people feel good, with participants saying things like, "This is an app that allows you to feel good about yourself, but it can also help you." Participants also found value in the process of finding a community. So the questionnaire that we had them fill out to get matched with a community gave them an opportunity to reflect on their own values and decide what was most important to them. So we all want to find ways to connect more meaningfully in our everyday lives. And when technology helps us to engage and contribute, then see the impact of that contribution, it helps to reinforce the good, idealized parts of ourselves, helping us, as we millennials like to say, live our best lives. So participants connected their experience on the app to higher order values like democracy, honesty, and community. And by demonstrating the material impact of their contribution, this app helped participants become more aware of how their hard-earned dollars were helping others while also helping themselves, with one participant saying, "This is interesting because it's not all about you." When so much of social media can create environments of opposition and argument, our community-supported insurance concept gave people the sense that they were in something together and had common ground. They felt more empowered knowing there were others out there like them tackling similar issues. So overall, participants were surprised by what we showed them, saying it was unique and new. Many actually asked us at the end of our research if it was available or if they could be put on an email list to learn more once it was launched. Some connected it directly to insurance, saying things like, it's a modern day insurance. While others didn't make the direct connection to insurance, they still saw it as a positive way to mitigate risk in their lives, as insurance traditionally does. Ultimately, it helped them to think about insurance-like products in new ways. And just to kind of summarize our findings, products and services that speak to higher order values can make a positive impact and help you stand out in a saturated market. Self-organization around values helps to create authentic connection in millennial lives. Insurance can be viewed as a community good with the right messaging and experience, and giving millennials a sense of control and agency by showing them how their money is being used can also help them spend their money in a way that ladders up to their higher order values. So thanks for listening. I hope that was interesting and insightful, and I will hand it back off to Sheffy.
Thank you. Okay, so I want to tie this back to what is actually happening in reality. So to move a little bit from research to reality before we invite Alan to speak. If I was to think about modern insurance nowadays, what it would basically look like is flexibility, the word trust, which has been thrown around, a charity component, obviously convenience, and maybe a subscription-like model. But when Lisa talked about that social good component, about understanding who you've helped, it's very easy to look at those that are tying charity to their core model, as opposed to your conventional insurers, which are participating in charitable events day in, day out, but that message doesn't resonate. And that ties back very nicely to how Emily opened up the slides, which is, you know what, maybe the bad news and the good news is that it all boils down to how you're going to tell your story. So with that in mind, I'd like to invite Ellen, which is the founder of USAW. Let me give you my definition of USAW, or USO, I should say, and have him fill in the gaps and basically kind of share his background and how he started the startup. But it's, you know, everybody has different definitions for communities, and obviously it starts with that sense of belonging. But USO is really that peer-to-peer, where a group of people are coming together to provide pet care. And in his mind, it's basically crowdfunding, right? It's the alternative to insurance. So Alan.
Yeah, hi.
If you don't want, hi, how are you?
Very good.
And he's from Los Angeles, by the way, so it's a little bit early on his side. So we're happy to have you, and would be great if you can share, you know, give us a little bit of your background, right? You have background in medicine and management, and what led you to start your business, and how do you define community?
Yeah, absolutely. So thank you, Sheffy, for the great intro. I have a background in business and medicine, and always had a foot on both sides of the equation. And I was teaching faculty at Cedars-Sinai. I'm a colorectal surgeon trained at Penn, and dealing with what we were seeing, and healthcare, I think, is a universally accepted kind of broken model. People have issues with it. And it just was a big question for me on how, on a daily basis, having a practice in Beverly Hills, I would have patients come into my office multiple times a day and say they either gave up on the insurance market altogether, they're pure cash patients, or they just couldn't afford it, or something to that effect. And so I really started to do a really deep dive analysis on insurance, and Emily's slides were actually amazing. We struggled for ourselves to try to show some of those things about scaling and pooling of money, because it's a very hard story to put onto a deck. But really, if you think about what insurance is, it's about community first. It always was. And when I started to first talk to people about this, or what we're doing with you, so they always say, well, no, nobody could ever afford what you do. It's all about the fund of money. And if you don't have the insurance as fund, then you don't have anything. And without that fund, nothing can be afforded. And you start to remind people that really insurance is just crowdfunding in of itself as well. The utter core of insurance, if you think back of Emily's slide, is just taking funds from people in the form of premiums, but it's crowdfunding. And we do it on a prospective risk basis. The big fund that we all think about actually functions for the promise to pay, so that some poor administrator isn't chasing 2,000 people to help pay for something unexpected for a person. And so it just makes sure the money is there, that promise to pay is there, but it's the scale and the diversification of risk along communities that makes the entire model work. And so the question then becomes, well, how do we start taking what we have today with what people want, with the needs for community, and what we can do with payment processing, and can we bring a different type of model, not as a replacement at all, but just as another alternative. There are 30 million people that don't have health insurance. 98% of Americans have rejected insurance for their pets. So clearly there's a gap in the market for filling for the people that are looking for something different. And that's kind of what led to us to do USO.
So you've mentioned risk, and with insurance, the devil is in the details. How are they coming together? How are they forming a group? Because obviously, even with pet insurance, different breeds, different costs. Do they care about the cost, or is it more about the community? What do you see working?
So it was actually good to kind of see how Lisa had gone through it too, because we had tried different types of communities and saw very quickly the same things she was seeing in terms of metrics. People care much more about this kind of community feel. So we had a group it's called Saturday Night Special, which I don't really get because I'm not a cat person and I don't get the joke, but people liked it. And that's what they went to. And when you do these startups, you start as like this whole MVP and a viable product. And so the core of our launch was just making sure everything worked, the site is functional. And actually the big overhaul we are actively pushing very hard right now is to bring all those social aspects that Lisa was talking about actually to the forefront, because they're not there, but they'll be there within about 2.5 weeks. We're going to overhaul the entire look and feel to bring a lot of what Lisa was talking about, that people need to understand where all those things are, and that the communication coming through, that's the final piece that I agree needs to be there. And we're actually putting that out soon, just exactly for that.
And to touch back to the autonomy that Lisa mentioned, how does that work?
Yeah.
How is a claim being approved?
Yeah, so there's in Europe especially, there's been a lot of attempts at these types of community-based models. Many of them have not succeeded, and I think it's important to follow each of them to see where they got stuck. One of the big ones that a lot of mistakes are being made is blockchain. This isn't your question, but I think that a consumer level blockchain is not ready to do on an insurance model. In terms of autonomy, what we did is we said we're going to leave it completely up to the group. We're fully agnostic as a system. So we don't block pre-existing conditions. We don't really do anything. We let the groups basically decide who they want to be with. I mean, we've had members who, for instance, we had one just last week, 5 groups rejected to have her come in. And so they answer a questionnaire. But then we followed up with a member because their dog had an allergy. And we said, why don't you put into your group request how much it actually costs on a yearly basis to manage these allergies? And so she added that in. It was $10 a month. And she got in with a follow-up request immediately. And so they are doing essentially kind of I wouldn't say underwriting, but kind of that risk diversification on their own. And people are much more willing to accept that because they understand that the money coming to them isn't from some large fund, it's coming directly from other members' pockets.
So how much of the cost is a factor in joining these groups of people?
For now, so we went live in the fall. I think for us right now, what we're seeing is people are really looking for there was a slide that Lisa had, I believe it was Lisa, not Emily, but where she showed somebody commenting on Oscar. That is true. So people want something new. So it's a funny thing you want to reconcile. 80% of millennials want something new. They want something that's disintermediating what works, what's kind of the old traditional system. But they don't want it until they're absolutely sure it works. And this is a financial model. We've built a new kind of financial platform And so, one of our advisors is the CEO of MeUndies, Brian Lalazarian. So he joked with me very early on. He said, one of the things you're going to have to get over is that for us, people could spend $12 and try an underwear, and if it doesn't work, it's not good. It's over. It's a one-time transaction. For what you've built, it's a commitment. There is a financial carry weight to this. And so people are going to come in, you're going to get a lot of registered users, and then many of them are going to follow it to make sure it's solid before they come on. And it's exactly what we're seeing. People are registering left and right, and then we're watching conversions anywhere from a week to about a month and a half as they've watched the platform and have seen the stories about how much things have been able to be shared and who we've helped and how we've been able to do it.
Oh, very interesting. And so what is the cost to join? Is there like a minimum cost to create a group?
Yeah, so what we're doing is all the groups, in terms of how we're doing it, all our groups are interlinked. And so this gets really into the weeds, and we could do a 2-hour discussion just on how we set up why. But every group is at a minimum of 10 users, but every group within the system is interlinked. And so what we wanted was for people to be accountable. And so even in the current model, most people are good actors with insurance, but it's a very small percentage, between 5 and 10%, that treat their insurance card like a blank check. They just pass it out to every provider. They don't care what cost is. Send me for every test. They don't think about it because it's them versus the corporation. And so what we wanted was to really drive home the point that when you're spending, you're taking from other people's wallets. And so that's what the micro communities do. But the system scales it so you have everybody in the platform is interlinked. And so, for instance, in December, we had multiple animals that ended up actually, unfortunately, being hospitalized. The overall cost to the system per member averaged out to $2.88. And that was what they spent to help, get these animals out of the hospital. Last month, there was a couple major surgeries. And so the average came out to $10 a month. A full wellness plan would actually be at about an average of $100 per month, every month, no matter what. And so for 2 months, our members spent $12.88, whereas they would have typically paid about $200 to be able to kind of allow that type of coverage, but we're doing coverage through sharing. Our model is set up as, since there's no fund of money that we'd make a flat fee off of, there's no percentage we're taking off losses. It's a pure subscription model to join. And so people pay a subscription on a monthly basis, and that's the only money we touch. We don't touch the flow of funds between the members. And then on top of that, what we've done is, for the promise to pay, everybody comes in and puts a refundable deposit, or a pledge, as we typically call it. And if you are good for the year with your members, that money comes back to you. It's our guarantee to the members, should you run or decide to be an NSF or insufficient funds, that the funds have already been pre-committed for us to draw from. And so we're not chasing it. And so it allows a little bit of the clearancy. What I learned on the medical side was it was that large fund that was for the promise to pay that really polluted the process. And not just by the insurers. I mean, even the providers and the medical device companies, everybody saw this huge fund, and it was everybody is trying to tap into that fund. And so with providers, you get CPT code creep, where if they do a surgery and it's a cash pay patient, it's a singular code. But with the insurance companies, they'll put 10 codes on. If an uninsured patient comes to the hospital, they will be cured, they will stay alive, and they'll have only the care they need. An insured patient comes, and every single provider gets consulted. You get physical therapists and urologists and colorectal surgeons who have no reason to be there, but because they're trying to tap into that fund as much as possible. And ultimately that runs out into premiums. And that's why our premiums keep creeping up as we're seeing them.
Well, in my observation, and I'm not a pet owner, and I probably won't be a pet owner, but typically when you see two pet owners come together, they just strike a conversation, and it makes sense that there's that affinity connection between them. I will also add to your comment that, or to the audience, obviously, as you know, we wrote about this in Coverager quite extensively with peer-to-peer insurtech models. Usually you associate that with a higher failure rate, but this really isn't the case here because you're bypassing regulation. This is an alternative to insurance. So oftentimes you're seeing the promise to launch a peer-to-peer, but they don't even they don't even make it to day one, right? So that's just an observation. Now, you are in the direct-to-consumer space, but you also have a B2B model. So let me just remind the folks that if you want to submit any questions to Ellen, this is the time. But if you just want to comment on that B2B component.
Yeah, absolutely. So what we have been seeing So the pet market is an incredibly difficult market to crack. When you say, we just crossed over the 1% market penetration for pet insurance nationally in the US this year. The rest of the world is at least about 30% market penetration. US citizens have in general basically rejected the idea of insurance for pets. And that's unfortunate because about 78% of pet owners, if they get a major medical bill for their pet, they literally are struggling between mortgage or rent and keeping that animal alive. And so even internally in our own team, there was times they would pull up other companies, traditional pet insurance companies, like, look how they're doing it, we should do it like this. And I always remind them, I said, guys, we have to remind ourselves that all these companies combined, their market penetration cumulative is basically 1%. So whatever is being done right now is not working. It's something new that even we don't know. And that kind of shows in what Lisa was doing with her slides, that the amount of research in terms of what resonates with people. It's not a clear-cut thing. I don't think anybody has it, ourselves included. And so what actually ended up showing is, as we're figuring out the consumer side, which potentially we may never get well, businesses love this model in terms of offering it as a pet perk. And so the growth in terms of organizations that are like, this is perfect, and pets are the #1 amenity that companies are looking at now to add as perks, has been basically going much faster than we had even imagined when we went into this.
Well, like, even beyond that, we constantly hear at Coverager, insurers come and basically say, well, what additional benefits can we provide because of that notion of going beyond insurance? I mean, AXA just created a whole entity called AXA Next to figure out exactly that. What does it mean to go beyond insurance? And again, it also ties back to telling a different story and showing value, not just when you pay a claim, but in a consistent fashion. All right, so any final thoughts or?
Yeah, no, I mean, if you wanted me to talk about just why we thought community was so important as well in terms of our research, or however you wanted to, I don't know where you want me to take it.
Sure.
Yeah, so one of the things I am very involved in. My kids go to a religious school, and as a family, we're not actually spiritually religious. I don't do petitionary prayer at all, but I'm a very big believer in community. And for the longest time in basically human evolutionary history, up until very recently, religious groups really kind of won over the idea of community, and a lot of it had to do with that physical structure of a place of worship. It's where people gathered to actually see each other. And I think it went far deeper than the idea of just prayer. I think for people it was, I can have had an entire week where I was disconnected from the world, but on a Saturday or Sunday, I can see people that I have a connection with. And as the world is changing now, we're seeing a major pivot in terms of how humans interact in the last decade that has never been like this in any time before. The idea of community is completely being reevaluated, but community to its core is something that humans absolutely need. But we're seeing that we're figuring out what that means and how to retouch that and get people there. And so, for instance, with millennials, they're finding that value in different types of affinity groups, be it triathlon groups or marathon running groups, or even knitting groups that go to little shops and they knit together. Having the ability to connect now based on a value is a really new and novel thing. That is kind of like what you call a very small value. I thought, kind of from New York Post just recently, 2 of 3 millennials don't feel like they belong, mostly because they don't have the time, which is interesting because if you actually think, for most people, our weekends were going to Smart and Final or Costco for stocking up for our offices. You don't have to do that anymore. Amazon does that. Things come to your house. So time is actually more available than it's ever been, but people's perception of it is that it's less. And in reality, we spent so many times of our hours running errands. Errands have gone by the wayside. And so I think people are trying to figure out how to make the use of the time properly for community. And I think the key one is about 20% don't have friends in a neighborhood, and 27% don't know how. And this says a lot about this new generation. What are we doing to get them to learn how to connect? Because a good proportion of them, or percentage of them, actually don't have the capabilities and know how. A quote by Wendell Berry: a proper community should remember also it's a commonwealth, a place, a resource, and an economy that answers the needs practical as well as social and spiritual of its members, among them the need of one another. And I agree. Shepti or Emily, will you go to the next slide? Because you guys have the control. A couple, on the intellectual side, we'll always look, so that's on the left. What is the power of community? And, there's different things would go, but they typically go to the ideas of collective wisdom. And so from a strong community, you can rely on each other to know what to do. And we see this now really as, for instance, people are figuring out how to understand what to buy now virtually. So I have a feeling that the 5-star rating system will go away and something more effective will come. But the way we evaluate products is that collective wisdom, and people are using online to do that. Communities help us push our limits, and so we know people who are and we see this in very culturally taught communities, a tremendous amount of success in terms of work life, and it's because that pressure amongst one another to push each other. Supportive belief, and I actually changed number 6 because I thought it was a repeat, but so security was my own addition to Jen Wack's kind of list here. An interesting study, this is from 2001 on the right, and I thought it was really interesting. If you look even up until 2001, the second one is locus. And so they did a study where they actually went to different cities and different populations of people, and they looked to see what their definitions of community were. Joint action was at about 50%, but when you get to locus, it was close to 100% in the city of Philadelphia, which I lived in for close to a decade, as well as even basically across the board, you had a spike at locus. And that's where things have changed. And even in 2001, locus was about community. I don't think we could say that anymore in 2019. I think if these researchers took the same people and said, let's define community, that locus spike would come down tremendously. And these things now that Lisa was describing, sharing, social ties, social action, because now you could effectuate that idea of community so much more effectively, are becoming what community is. It was one thing to say, I want to be in a community of, people who are fighting climate change. Well, how would you find them in 2001? How would you find them in 1990? Was there a good way to find them? It was very easy to find a Jewish group or a Christian group, but how did you find the climate change group or the triathlon group or the knitting group? It was very hard to basically associate like that. And so locus and geography kind of played into that. And this is where we're seeing that massive shift now. People can now form communities virtually very easily. And then we have to just give them the tools to give them what we see on the left. What are the 6 things you get out of community? Allow them to achieve those things, but virtually. And people they'll flock to it very quickly.
Hopefully.
Well, it cut off for a second. Say it one more time. So sorry.
Indeed.
Yeah.
So definitely not without, challenges, right? Building a community, but obviously it's a very interesting story, and we're followers.
Well, thank you.
I see that so far we have no questions from the audience yet, but if Pierre is ready, we can turn it over to him. And the story of Relove is very much different than the story of USO. But as we said before, different applications to community, different methodologies. And what you're basically going to hear from Pierre. Hi, Pierre. He's joining us from Paris, where it's also very cold. You're going to hear a lot about social proof. And we're talking here about car insurance, so very much regulated. So Pierre, why don't you share with us first, what is your definition for community and how you bring those aspects to life with Relove?
Sure. Can you hear me well?
Very well, yeah.
Okay. So basically, like you said, so Relove is around insurance of mobility. And maybe I can explain how we came about that idea before I go on about the aspect of community, which is very important for us. As it happens, I was born in 1980, so I'm not too far from the millennial group. And Relove was born out of the personal insatisfaction around insurance. And when I looked at the topic, the first thing I looked at was, what do I expect from a service in general? And that's the interesting thing, is it can be any service, not necessarily insurance, as a millennial. And there were a number of things, which were simplicity and transparency, fair price, and knowing that I was getting some value out of that service. Certainly something at my fingertips. I wanted to have something in an app. And last but not least, I think I was after an experience. You have to have an experience happening whenever you purchase a service. Coming back to insurance, what we focused on was mobility, because mobility is changing. The way people are moving is evolving very quickly. And we decided to focus on the most concrete market around mobility, which was car insurance, because car is still the mean of transportation, which is the most used currently. Looking at that, people are, certainly in Europe, maybe in the US as well, but certainly in Europe and in Asia as well, people are using their car in a very different way, probably less frequently. And because they have replaced cars by other means of transportation to go to work, etc., whenever they can do that. And they still own a car simply because they've got a family and luggage, and they need to go and see their family on the weekends, go shopping and go on holidays. But they use their car less frequently, maybe for more meaningful trips, I would say. So the idea around Willow was to build what we call pay when you drive, so a subscription-based car insurance product, where the price you pay would evolve every month depending on the number of days you've been driving, with no limits in terms of how many miles you can drive, how many trips you can take. We're just looking at the number of days you've been using your car, and the more days you've been using your car, the more expensive it is, but it will fluctuate on any given month depending on your usage. It's a mobile first experience, so you can get a quote by answering 6 simple questions directly within an app. You can subscribe directly within an app, and it's a video call like we have right now. And we thought it was very important because for millennials, a digital experience doesn't mean a dehumanized experience. You still have to have that sense of connection to the service and the people who are running that service on the other side. And so that's why you have a community manager, who's coming directly into your phone through a video call, so like a FaceTime conversation, which takes about 10 minutes to fill out the administrative part of your contract. So we take out your contact details, etc. We take pictures of your driving license and other papers that are compulsory to build an insurance contract. And at the end of those 10 minutes, that's it, you're insured. And then we build a frictionless experience as well. Whenever you use your car, you just have to have your phone on you. You don't have to push a button. You don't have to do anything. You just take your car with your smartphone, and we detect your trips. And at the end of the month, we determine how much you're going to pay. You may have noticed, coming back to communities, so our name and our logo is not very insurance-like. I guess you will agree. So that's the way we spell "we love" in French. That's the French way of spelling "we love." But we wanted to, and that's very important. That branding and that logo is very important to us, because we wanted to federate people. And we view ourselves more like a lifestyle brand than an insurance brand. And by the way, we're not selling an insurance product. We're marketing an app with an experience in it and with benefits and values attached to it, which is insurance, an insurance service. But this is really all about the community and the experience. And then we build upon that. And people come to us because they share a same approach to mobility. So they probably don't use their cars every day. They try to use other means of transportation to go to work. And so what we wanted to build was a community which shared a common sense of using your car responsibly, because it's good for the environment, because it's good for your, for your personal finance, in terms of spending money, etc. And then bring them a common product. But the community grew from that central aspect of sharing this kind of mobility. And the vision we have at Wilov is that we, in the future, in the next 10 years, will be ensuring your mobility, whatever form it takes. It can be car insurance, but then it can be, you go on an electric scooter, you use a bike, you use whatever. We will ensure you seamlessly and in a frictionless manner and at a fair price. And that's one of the questions you had for Alan before, which was, do people come because of the price or because of the aspect of the community? I think, car insurance is still a very, very competitive market. It's like the first product people, like home insurance, I guess, but it's something which is very competitive, and prices tend to be very aggressive in exchange of guarantees, which are not always very, very good. So we took the opposite of that, and we offered a product which is full coverage. We offer a roadside assistance. It's a quality product. It's a luxury product, but at a fair price if you don't use your car every day. And so people come for the price. I won't say anything else. They don't come for the community. They just have a common pattern, a common usage pattern. They come for the price, but then something magical happens, which is the onboarding process and them seeing how they use their car, and that there are other people sharing the same approach to mobility, and they stay for the community and for the experience, and they talk about it, and that's where we build what you call social proof.
I think that's a really fair point. They come for the price, they stay because of whatever this magic is. The wrong way to go about it is to think that you can just create magic out of insurance, as this is where we see sometimes misalignment. And in terms of, I will just add, yes, your brand resonates, it's very positive. Vice versa, we have new entrants that are all about, we are not this, or for if you don't like insurance, come to us. So, just to comment that none of that is going on with your branding. You've mentioned something that I just want to make sure that other people picked up. You've mentioned that you have community managers, right? Yeah. So I think, part of it is also how you describe what you do and paying attention to the details. So he could have called these folks account managers or producers or customer service, but, it's just, when you told me about community members, I immediately thought, well, we would love to have you in this webinar, although this was kind of planned. So to the fun part, right? You mentioned the simplicity, you mentioned the product and the price, right? So what is a community? What's the definition of community in your mind? How do you build that community? What is that magic?
Well, the magic, like I said, I think, and that's coming back to your point about account managers versus community managers. It comes from the culture you build within your company from the start. We're a startup, so we have the benefit of starting from scratch and being able to do that. But when you look at any brand or service right now, big brands, I'm talking about, incumbents and stuff, you would have account managers who would do onboarding and dealing with the clients for their claims, etc. And then very often you have community managers and a Facebook page and a Twitter account and Instagram and what have you, and chat, etc. and messenger on Facebook. And there is some sort of disconnect to the extent that when you try to connect with those brands through social networks, for instance, social media, you would get in touch on Twitter because it's usually disgruntled, people who are not satisfied, they will shout on Twitter. Then you have a community manager who gets in touch. It goes private, and then they handle it back to an account manager. And we didn't want that at all. What we wanted was a group of community managers who would do everything. So they do client onboarding, they deal with, the ongoing life of the contract. They post on Twitter, Facebook. They deal with everything, and that's this kind of holistic or continuous experience, which is very, very important to foster this strong sense of community, because the people, very often you may have a customer of us posting something on Facebook, and then we do a shout out to them on Twitter, or we send them, one of our account managers, which is a community manager, will send them a personal email saying, thank you, for mentioning us. And this is the magic we're looking after. And for this to be scalable, you probably have to have this approach embedded in your customer service approach. You can't have layers of, an army of customer representatives and then the small team of community managers who are doing their best to try and grab the numbers of followers and stuff like that. We'd rather have everybody being involved, including me and including my co-founders, and that's important as well. Every day we make the effort. We try to do one customer onboarding, to see our customers, new customers, to hear what they have to say to us during the video call. We look at customer support. Everything is embedded in the product, and that's really where you build that community, I think.
And you've managed to kind of earn great results, right? Do you want to talk a little bit about your social proof and the organic? Okay.
Yeah, that's an interesting thing. Social proof is very hard to build, but once it starts, it's you've got this kind of hockey stick growth in terms of comments and ratings and stuff like that. And like I said at the beginning, we're marketing an app before marketing an insurance product. And so for us, our target, for the whole team was to have the best insurance app in the world, in France to start with, but even in the world if possible, if at all possible. And how do you measure that? Well, you measure that it's very easy to measure, because on app stores, on the Apple App Store, on the Google Play Store for Android as well, people tend to comment. They can be very vocal if they love you. They can be very vocal if they hate you, and in between, you won't get any feedback. And it's very interesting to look at that positioning with an app store, in the app stores for various insurance apps, being incumbents or startups. And so we worked on that, and right now we have the best rated app in the App Store in France. We've got a rating of 4.8 out of 5. We've got double the comments of AXA, for instance, to quote an incumbent, but it gives you an idea of the number of ratings we get. They have millions of clients. We have thousands. But that's where the magic is, where people are strong advocates of your product. So that's what we're looking at. In terms of other achievements, we got recently awarded the Editor's Choice from Apple, and it's the first. We Love is the first insurance app in the world to get that, so we were very proud of that. But it comes from that activity from our community, and in terms of actual numbers, more than 50% of our growth is organic. Comes from word of mouth, people looking at, and the other thing, the way we market, you can market a product like that within a community is you can reward them for talking about your product, like referral programs and stuff like that. If you look at the traditional way insurance companies would do that, they would say, if you talk about us to one of your friends, and she subscribes, then she will get, I don't know, a 10% rebate on her annual premium. We took the opposite approach. We took the approach of an app again, and what people get when they refer us to one of their friends or family is something which they can actually consume in the app, which is insurance, number of days they can be insured. We offer them 30 days of insurance, but this is trips that they get. And so since they have to explain how the referral program works, they have to explain how We Love works, the concept, this whole concept of pay when you drive. And this is where it becomes viral, and they do the marketing for you. And that's the great thing about it.
The long road to success is usually the fastest, right? It sounds like you're doing everything right. And I will remember the fact that digitization is not dehumanization, which is your quote. So thank you for that. I think it sums up the story of We Love very nicely, and also kind of differentiates between when you're operating in the car insurance space, to your point, very competitive. There's not a lot of room for kumbaya. You have to prove that it works. And as you mentioned, you're going against AXA, which everybody knows, right? So thank you very much. I see there's no questions, but if we get follow-up questions, I'll send them to you. I want to thank everybody for joining. If there's anybody else have any more questions to add? All right, Emily, Lisa.
Thank you, Shafi, and thank you everyone for attending.
Bye, guys.
Bye.
Bye-bye.